Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 28th COT report in 2014. As usual, we're going to start off with the changes in commercials positions. You may see we've got gasoline on top of our list with a 28% change in commercials positions. We've got the same change size in large speculators. The change can be viewed over here, definitely much larger than average. May actually be even larger change in the last 52 weeks time range. Of course, it is a bullish change signal. Let's have a look at some larger bullish changes we had in the past. The last time we had such a change was actually an effective signal. We've got some good examples on the chart. Not that many, but there are a few. Let's open a 5-year chart and see how extreme the gasoline market is. Currently, you can see that the most bullish extreme happened back in 2010. Well, we're pretty far away from those levels. And bearish extreme, I would say, it's hard to tell from the chart, but either in 2013 or it could have been in 2012. Anyhow, you may see that we are more or less in between these two extremes, so we cannot talk about a significant extreme. Actually, the last larger extreme was a bearish COT extreme back over here in the beginning of this year. Since then, you can see, although we had a bit of a rally, prices are back in a decline mode right now. Moving on to the S&P market, let's have a look at that chart. We have a 24% change in commercials positions, but here you can see that this is pretty usual, having such larger changes in the S&P. Extreme-wise, let's open a 5-year chart and see how extreme the S&P 500 is. Bearish extreme levels, well, we're unfortunately past those levels already. A few months ago we had these extremes. Of course, we cannot talk about a significant bullish extreme either if you look at this extreme back from 2011. So not much to talk about in the S&P 500 COT wise, of course. Crude oil, next market, with a 19% change in commercials positions. You can see that it is barely visible, so it's not such a huge change. It's definitely larger than average, but at least from the chart it's difficult to tell. But anyhow, it is a bullish change signal. We do see a bit of a rise in prices last week. Opening a 5-year chart, let's see how extreme crude oil is, or was actually a few weeks ago. We had a very large, significant extreme in the market. Of course, it was a bearish extreme, and as you can see, again, was an effective signal. Prices have declined afterwards, and now we're seeing a rally last week. But of course, if this extreme holds, we may see the continuation of this decline in prices. Moving on to large speculators COT Extreme. Here we go. Soybeans on top of our list with a 226 report extreme. Let's open the 5-year chart right away, but I want to warn you, if you look at commercials, we have an even greater extreme, 429 report extreme. But then again, if you move on to small speculators, you're going to see we have an all-time COT extreme in the market. So significant extreme in soybeans. Of course, it is a bullish COT extreme, and there's no question that we are expecting a bottom soon. If you look at the chart, you can see that how well soybeans correlated with the COT extreme signals. So we are expecting a bottom to develop soon. Silver, our next market, we have a 198 report extreme in large speculators. Opening a 5-year chart right away, you can see this extreme. What's interesting is we had a pretty large bullish extreme not long ago, pushing prices higher, as you can see, and in a couple of weeks we've moved away to the opposite extreme levels very, very fast. So this is a bearish extreme. Of course, we do have some space left to reach even higher extreme levels, but those extreme levels are not that far. Unfortunately, small speculators are not that extreme above the market, which would be a good signal for us if we'd be considering a bearish trade. But anyhow, the extreme is there, and anybody who's considering a trade in silver should take that into consideration. Russell 2000, our next market, our last market for the review. We have a 160 report extreme in large speculators in Russell. It is a bullish extreme signal, of course. Even on this 5-view chart, you can see greater extremes in the past, indicating that this rally may easily continue for many, many more weeks, maybe. Okay, that's going to be all for this week. If you enjoyed this review, I hope you're gonna join us next week as well. If you'd like to have a look at other COT charts, you can do so at our COT charts page, and of course on our COT analysis page. You can do more detailed and COT analysis that you wish for. You can add the long-term trend to the table, volume and open interest scores, and also the COT index. You can look at other COT report types maybe, or other data types as well. So a lot of great functions at cotbase.com. So again, I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.